And Ajay Srivastava was pointing out to this strain on demand that even the mighty Maruti is facing. But Ajay, therefore, how would you approach the market, or what would you advise traders and investors? Does one just respect the ticker and as a trader go on playing? What should the investor do? Wait for prices?
See, trading, I'm not a great trader, so Lata, I'm not the best person. But I think from an investing standpoint, you have to be realistic as to what you are investing in and what the return expectations are. I think that's the point which we're telling all our investors is that number two is change the horizon, because in the immediate future, you may see upsides of tremendous kind, may not see the rally may continue, but you need to moderate your expectations given that the rally has taken up this thing. So from investing standpoint, you need to moderate your returns expectations, and you have to moderate a little bit of the time horizon that I'll get a return in a very short term. Having said that, I think one of the advantages of what's happening in the market is that the rupee-dollar parity is going to give a lot of relief to large sector of indebted companies. Everybody who's sitting with huge amount of dollar liabilities is laughing away, because that's given them almost like a free money for the year. You know, look at last year, they had a depreciation of 5% and interest cost of, let's say, 4 to 5%. That makes a 10% cost of the funds. This year is going to be zero cost of fund. So I think if you focus around companies which are sitting with large foreign loans, they will have a happier year compared to the previous year. So in that some segment, you might find greater cheer for investors than the other segments. Number two is people like Marutis and MNCs. My guess is that, including Maruti, is that if the rupee remains at 64 or maybe even appreciates, they might want to or need to perhaps adjust royalty amounts, because the parent is used to getting a certain amount of dollars every year in terms of royalties. So MNCs might see that the royalty rate, whichever way, marketing support or other things, might get jacked up to compensate for the 5 to 7% drop in realization in dollar terms for them, because if the rupee terms remain same, they will get less dollars. So I think MNCs got to be careful. You might see greater outflows. Companies which are sitting with long huge foreign exchange loans, I think are going to see a good run, because in the first year they will have mark-to-market profit as well as almost zero interest cost.
Ajay, simple question. I mean, given the way the market's running and the way the momentum has been, should you be buying now or should you not? Because those who are not buying, you know, talking about the valuation argument, perhaps there's this huge feeling of being left out as well.
You know, I don't know, Surbi, who's not buying, because every day the deluge of money is just growing, you know. So even, I don't know, if anybody's on the sidelines, I'm not sure how many of those are still on the sidelines. If there were, I think by and large after UP election, they all jumped in the fray. UP election was kind of an inflection point of most people looking for value. But having said that, you know, the problem is that now for the fund managers, the responsibility is becoming more severe as to how to plow the money, which sectors, what to do with it, because should the market turn on you, and market can do funny kind of things to people all over the, you know, in last so many years you've seen it, then they'll come back and tell us, but you just should have guided us correctly. So I'm not sure many people are left out. The only perhaps answer is that many people have jumped in little too late, leaving very little margin or cushion. And the biggest worry, if you ask me, my only worry is the mid-cap space, because I think that is not going to perform fundamentally. That's going to give us very, very nasty surprises on the negative side, on the performance basis. That's my only worry. I think large caps, by and large, you should remain comfortable with them, because they have a clean lead in the market in funding, market share. GST policy will give them a good leg up at this point of time, because liquidity is going to be a major factor in when GST gets implemented. So large cap universe, I think, is secure by and large, plus minus minor variation. I think it's the mid cap space post GST which will see the maximum turbulence.